Yeah, we should be live into it. I'm just going to go and refresh that page and make sure that we're there. We are there. So anybody that's in this group can have a bit of look at what we're doing. So I'll keep it up here so I can see any comments if I've got any there. Heather? So first, it's probably good to introduce myself. I'm Brian Knight from Melbourne, Australia, and I trade Forex. And we're just putting this into the Forex Roadmap to Financial Freedom group. And this is going to be a little bit of a training on what's called Quickfire. Just showing an aspect of trading and to increase the percentage of profits, I suppose, or of being able to earn income out of it. Now, we're not going to be talking about dollars and stuff. We might talk about risk management and monies and that sort of thing, but it's not, the usual sort of disclaimer goes that any of the stuff we say is really just about, it's up to you and trialing. So over to you. You are?
Heather Wilson from Mackay in North Queensland, Australia.
Oh, gosh, a couple of Aussies. Now, this is going to be dangerous, I can see right from the start.
Yeah, mate, it'll be really good.
So, Heather, you asked me, actually, it's probably you didn't ask me. I said, how are you going with what's happening with trading and stuff? And I said, have you looked at the Quickfire? And I gave you a link to nearly 2 hours, I think it is, of a video on Quickfire and the basics and even getting a little bit more advanced. But I think one of the things is that there are some technical little bits. And I was having a discussion with a really good friend last night, and he was talking about hey, I've got the technicals, and I went, yeah, that's like 90% is how you deal with your head, and 10% maybe is the technicals. So got the technicals, now let's work on all of the other stuff.
Mindset.
So the technicals are not that difficult yet. That's where the main focus is really of people learning to trade is really, can I get the technicals down? And yeah, you're right, there's some little things. I mean, you've been trading with one of the other tools out of IML, haven't you, Heather?
Yeah.
And that's got some technical stuff. It's not that complicated, is it?
No, not at all.
So, yeah, let's just look at the components of this. For example, is that me dinging? Sorry, it's one of my Telegram channels that keeps going off here. I might just mute it for a minute.
Comes Dan. Hey, Dan.
Young Dan. Gosh, it keeps going. This Telegram keeps pinging away at me. I'm going to... actually, I don't know how to mute it from there. How are you?
Not too bad. Not too bad. I'm in a darkened room.
Yeah.
I was just going to say, it's in a dark spot there.
It's 10:30, so...
Well, it doesn't matter. We'll just leave it there. I was going to say, if you disable notifications, does that mute it? And then that won't send them. Does that
Telegram? Yeah. You can disable notifications for the period of time that you want them to not talk.
Ah, okay. Yeah, okay. We'll just do that. Okay, for an hour. Just because it's pinging away all the time. Right. Well, we're just speaking about about Quickfire and the components that we really basically need for this sort of process. So let me just share screen. Oh, I better not show that one. Not that it's a problem. I sort of freak too many people. It's just a trading view. So let me just share. Well, look, this is not about sort of things too complicated. So let's start out with the fact that, let me just go out of this then. Can you? Oh yeah, log out. There we go. So I'll just a view of what's happening. So I can actually sign into what's called a web scanner there, Heather, and you've got this as well. So if you're a member and part of IML, this is just part of the basic package. There's no extras or anything.
Yep.
So I've got my user and password stuff, remember, and just log in. Now, it's an interesting sort of little animal, this, and we're talking about, it's a web scanner. You can see, or a harmonic scanner. You can see it's got patterns and basically need to be logged in. One thing I want to point out right at the moment, right here now, is if you see up in this top right-hand corner, it says that the market is closed. Now, it closed about 22 minutes ago. That's okay. We're not doing any sort of live trading. This is really a training exercise. And I want to start out right from the basics and then sort of, don't build too much, but allow people to go, this is not that scary and not that complicated. So, and the other thing I want to point out is that there are a number, on this left-hand corner here, there's, say, for example, that is, I can't remember what hot. I think it's,
yeah.
I think it's hot. Let me just open one of it. Yeah, hot 4X. Then you have another one here on the side. These are different brokers. xm.com. Then there's JAFX. Then there's Pepperstone. Then there's Traders Way. And there's FX Choice. These are like the broker scan messages that come. Now, there's a lot of controversy about who do you use. Do you have to use the ones for your broker? Like I'm with Pepperstone, and I know, Heather, you are as well. So do we just use these Pepperstone ones? Well, you don't actually have to. And I'll show you something in a little while. So, for example, you could even use the Traders Way ones. And in actual fact, I subscribe to a Telegram channel somebody has that has a Traders Way account that gets these scans into their, what's called their MT4, and it sends me and a whole lot of other people, when a new scan comes in, it actually sends out a Telegram message to me. And so I can show you that a little bit later, but that's just from a notification point of view.
So do you just need to be on Telegram to get those messages on that particular channel, or is
correct? Well, you need to pay. There's what is it, Dan? $4 or something US per month?
It's not a lot.
$3.95 or something.
I get both. So they've got two. There's one for the 15-minute scans and one for the hour up. Both of those cost me about £5 something a month for both of them. So I think it's only like $4 US.
Yeah, I think it's $3.90 something or whatever. It's not very expensive from that sort of point of view. So let's then come back to the basics of, well, why would we want to look at this scan? It's called a scan, and there's a pattern. This one happens to be what's called an alternate bat pattern that I've pulled up here. It's at xm.com. So let's go to a Pepperstone one, and what you'll notice is that not all brokers have the same number or the same type of scans either, which is a bit of a like, oh, okay, interesting. Now, so we'll go into that sort of, initially it doesn't matter which broker scans you use. They just need to be ones that are reliably drawn and that you can make objective assessment of, if that makes any sense. It'll become clearer as we go along anyway.
Yeah.
Now, the other thing I want to point out is that if you look here, it says charts by trading view. Charts by trading view. So what happens is there's a company called TradingView which you can use to look at all different pairs and all different trading, particularly Forex, but also Bitcoin or cryptocurrencies and other sort of trading. You know, you might want to trade gold, silver, or whatever. It has all of those things. And I'll show you that in a little while. And what this company does is they use what's called the skin, or some of the basic features of TradingView to put these charts onto. And so if you know how to use the facilities of this, then the transition into TradingView and using that is actually rather simple, even though this is a very simple model of it.
Yeah.
Now, the thing about it is when you want to use, and we're going to talk about Quickfire or QF. So from now on, if I say QF, it means Quickfire. Yeah. I'm just going to. Yeah. No worries at all. So yeah, Quickfire, QF. Is that okay so far, Heather?
Yes, thank you, Brian.
Good. Now, if there's at any stage, if you're going, well, I missed the point or whatever, let me come back and we'll go through it again. Okay. So in relation to this, there's some basic things in Quickfire and in currencies as such. You know, we have a pair. Now, this one is New Zealand dollar and the US dollar pair. And you might ask, does it matter if the market's closed? Does the market have to be open? It has to be open for us to trade. This is a training exercise. So once the market's closed, we basically decided to do this sort of training so that we can, you know, get a little bit under our belt to understand how it works when the market does open. And the market had open Australian time, Eastern Standard, around 7 o'clock on Monday morning. But that's not necessarily the best time to trade, I can tell you now. So this scan here is basically, well, it's based upon an algorithm or a mathematical projection.
Fibonacci.
What is it? Sorry?
Fibonacci.
Yeah, I was going to, well, Fibonacci is the technical word on, yet there is this sort of mean average and golden mean and a whole lot of other things that are behind it. So people think that this just draws on there. It's actually a computer, a program that actually identifies the points that are in this pattern that's on a currency pair chart, and it draws them based upon this Fibonacci or this mathematical setup as such. Now you have an X, A, B, C, D, and it'll be X, A, B, C, D on all patterns, but you'll notice if I drop this down here and we're just going to the 15-minute ones, you'll notice there is a shark, an alternate bat, a gartley, a butterfly, a bat, a shark, bat, shark, gartley, bat, deep crab. There are all different types of patterns, yet they all have X, A, B, C, D. And the D point primarily is the point at which there is a high probability of some sort of movement or action. I'm not going to get into other sort of projection type of tools, but we'll look at just it is as a basic sort of setup. So is that okay so far too, Heather?
Yes, thank you.
Now this one, we'll just play one. So let's look at setting the chart up. And the thing is, you need to know is once we've set the chart up to sort of have different features on it, and I'll explain why we'll have them, and we'll look at that in a little while. Once you've got the setup up, if you close this down and open it back up, it loses all of those things that you've put on there.
Okay. Is
And
that the difference between, sorry, Brian, is that the difference between the web scanner on IML and the web in the trading view? They don't lose it, or they do lose it?
Trading view won't. The issue though is trading view will not show up this scan on a currency chart.
Yes, yes, that's right. It won't. Yep.
Yet. If you were to copy this over onto a trading view chart, it would stay there if you save it.
Okay.
Does that make sense?
Yep. Just have to learn how to copy it.
That's actually not that difficult.
Yep.
All right.
And once you know how, it takes like 5-6 seconds.
Yep.
Yeah, it's actually Dan showed me plenty of times, and there is a video. One of our educators, I think it's only a short one, isn't it, Dan? It's only about 15 minutes or something. He actually shows how to do split screen and just copy it across from one to the other. So even though this is in trading view as a skin, we call a skin, or it's like a palette that it's on, it still doesn't, it's not, you can't sort of just go, oh, I'll just go to trading view and it'll be there. It's not. So that's a first thing that's just sort of put up there. The other thing is, let's look at the basic things. So for example, down here, can you see at the bottom of the chart there, can you see that there's a UTC, like a time? So one thing that's really important that you need to actually have, well, it's not important, but there needs to be the same time on, if you're going to transfer this into trading view, it's best to have the same time frame, because if you go to trading view and it's like 12 hours difference, it's like you don't know where the candle is. You can look at it, but it's probably a little bit more difficult. Okay. So because you could change to Brisbane, Sydney, I'm sort of Sydney, Melbourne time, so I'll do that. But it is exactly the same time as what you have though, Heather. All right? Yep. And for Dan, like he would do London time, for example.
I actually have 3 different times on my trading view charts.
Yeah, because you got New York as well, haven't you? Yeah.
Sorry, only 2. So my 1 minute is New York, and my anything above that, my 15 London. And above is like London.
Yeah. And we'll look at that in a moment in something we may not, we'll see. So for example, this is how you would change the time there. So that's step 1. Well, sorry, step 1's logging in and getting into this as an ability to trade. Second thing is that we, sorry, I just got to, somebody's trying to ring me. So the second thing is making sure, you don't have to, but if you have a similar time to your local time or same time, it makes it a little bit easier for you to manage. I've had mine set up or not. I think it can. Does it normally have RSI just sitting in there? I think it does.
Yeah, no, RSI is bog standard.
So this is a relative strength indicator, which is like what's called a lag indicator. And I can have it so that I can turn it off and it not show, or I can turn it back on. You can see these little 3 buttons. There's like an eye, which is to show it or not show it, or to hide it or to show. The next one is the setup or the format of it. If I click that, it'll show up length and the style, the color of the line and how thick it is and that sort of stuff. And also the setup. I'll go back to that again. So here at the moment, it's set up with 2 lines, an upper limit and a lower limit, and also to the line's background, but we'll just leave it as that. And the upper is set at 70 and the lower is set at 30. And that's pretty standard. I know, Heather, not you, actually, there's someone else I know that was playing with 80 and 20. So there's a strategy with something else, another strategy, which used a higher and lower, higher
that was the sheriff's strategy. He uses the 80-20.
Yeah. So we'll just keep it at 70-30 at the moment. And I just want to sort of to say that also too, that also, oh, scared, I hear it's back. That in actual fact, that line there is a lagging indicator. So it sort of only shows what it's doing after the fact. It's not something that you can use to sort of look into the future as such. So it's quite an immediate thing. And you can see here when the currency pair came up, it was up quite high here. If you look over to the left, so because I'm holding the sorry, I'm holding the cursor here. But if you look over at where the RSI number, you know, where I've got that, where you can see it or hide it, it'll tell you it was 68.163. But if I hold it where it is now when the market closed, it's only 45. And basically in the middle of 70 and 30 is in actual fact 50. Yeah. Now that's okay to have that. We can just pull that down a little bit and make it a bit smaller. It doesn't need to be as big. But the couple of other things that we use on here is actually called Bollinger Bands. So if I click on here, up here is this little sort of called indicators. Just knowing what's going on. If you go down here and just the word Bollinger Bands, if I click on that and then X that, you'll see that it actually places a colored section and two lines. There's an upper line, a lower line, and a midline. Yeah, and that midline is actually on that candle or that currency where it is. Well, not actually the currency because that's down there, but you know, it's sort of like the mid-range between that and that. Yeah. And you could, we click on it, we could set up the upper and lower, where the lines are, plots, inputs of where the length, whether it's 20 and the multi-two. What do we got on? Yeah, no, it's on a
50.
Yeah, it should be 50 there.
Oh, is it 50, not 20 there? Right.
Correct.
On the Bollinger Band, so it's different again.
Yeah, and this is what I do. I've got a little sticky note here with all my sort of settings so that I check. And the reason, once you do it quite a few times, it becomes pretty easy to remember it most of the time. So if we do that and put it there, see how it changes that slightly? And I'll just bring that. There you go. Let's bring that back in the middle again. I'm just moving, pulling up and down this sort of the price scale here, and then just moving the chart around so we can put in the middle. So this is the sort of the setup for Quickfire that you need. So that's there. Then the other thing that we tend to put in, or which is good as an indicator, we put in what's called the MACD. So I'll just click on that. Now that goes down at the bottom here. See that down here? And I can make that a bit smaller or larger. It really doesn't matter. But we do need to make some changes again. So we can hide it or we can show it. And in here, the settings are actually quite different. So that's
3, 10, 16.
Yeah, 3, 10, that's right. And 16 here. Now, there's also a bit of a style change because we have a histogram which we actually don't really need, other than we need the MACD, and we'll make it a bit thicker and we'll turn that into a histogram. Might make it a little easier for us when we're doing what we want to do or not. We'll see. You don't have to. So if you notice, it's the blue thing, the blue lines going up and down is what the MACD is, not the signal. And we can even take the signal off if we wanted to. And I've taken the histogram, we're taking the histogram off, which is the other part. We don't need that as well. Yeah. So here we go. And like, how long did that take? If you just do click, 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 change it, click, click, you've done. So one thing to remember is when you open up this harmonic scanner, this IML harmonic scanner, You'll just have the RSI and you'll be able to pick up your chart. Once you put these couple of things on, change the time, put the Bollingers, make sure your RSI is right, put your MACD and ensure that's right, and you leave it open, even if you change. So let's go now, and I'll just pick a different chart, say the GBP NZD. Did you see what happened?
Oh, it still stayed there. Yeah.
Absolutely.
So you can keep that there and change your pairs as you go, and it'll stay there. But if you close out of it and come back in, it doesn't save. Right.
Correct. You lose it all.
Gotcha.
Yeah. So that's just showing you that the 2 minutes it takes to set it up at the start when you're starting to do this in your Quickfire session,
yeah,
you know, whether it's once or twice a day or whatever, or however much you want, it will keep it there.
Yeah, as long as you don't log out.
Yeah.
Okay.
Or refresh.
Yeah. That's an issue as well. Yeah, and if you have to refresh, how long is it going to take you to set it back up again?
2 minutes.
Oh, yes.
It's well, you know, people sort of go like, oh, you know, like it's the effort that you need to do, and that's okay.
Yeah.
So here we go. Is this rather simple at the moment, Heather?
Yes, it is.
And I think it's, you know, these are the things that people don't have the opportunity to look at and sort of go through. So let's just, for example, now we want to look at the components that creates a Quickfire, or the possibility of a Quickfire trade as such. And let's
the rules.
Yeah, the objective, not subjective. So they're things that you need to tick boxes off for it to actually happen. And so first things first, in any Quickfire, in any chart, in any, well, there are a couple of little exceptions, a bit like the English language. There are always some exceptions. Yet if you understand those, you can play with this quite easily. So let's just stay with this chart, and we need to go first in a Quickfire. There need, you know, it like you go, wow, what's all this stuff going on? There's, for example, you know, these are all candles. My gosh, that's a big long candle there, and all these other candles. Then it sort of goes across the back of the scan, and then drops down to the D point, and then it sort of goes off again. And then you have these lines on the side here. You have this red dotted line, and over here it says 1.91641, which is actually, in fact, the current price. It's actually the price when the market closed, but that actually can move and change, and it will. When the market's open, it will. You have what's called an entry price, and what is that entry price related to?
That's related to once the candle touches or goes through that entry.
No. How is the entry price actually put on? Why? How does it come about having the entry price on that chart? And you're right, the next step is what you're talking about, but how come that green line is put there?
That is the probability that they're looking at, that the candles are going to go in that direction.
No.
Still don't know? Righto.
It's actually point D. It's written, it's actually a line from that D point.
Oh,
so
right.
When the scan finishes at point D, that's where the green line is.
Does the green line appear when the D's finished moving, or?
That's where the harmonic scanner predicts that pattern will terminate.
Correct.
So that is
at
where
point D.
Yeah, so this is like the ideal example of the entry line. So a scan will appear when it's roughly around 91% complete.
So just before that, you know, sort of before that last candle, really.
And it should say this is looking like it's going to be a bat pattern through all the mathematical Fibonacci ratios. This is where point D should be. And then that gives you the price line where it should be.
Okay.
So that's their projected reversal point for that scan.
Reversal point. Hear that word. Okay, so just think of this as a real basic, is that you've seen it comes down and it reverses. It goes the other direction. It didn't go down further. So that point D being Fibonacci related, and as Dan said, it's the prediction of where it will reverse and go in the opposite direction. So that's an important thing to understand. Now, is this like 100% predictable? No, it's not. Does this have a high percentage of predictability? Yes. So is anything in Forex 100% predictable? No. There's always the market and what it will do. Yet the market's full of Fibonacci-ness and how it relates. So we'll come back to Heather. So you'll always see if we go to another chart, for example, let's go back to the one we had originally, and you'll see again, you start to see the pattern. See the entry line there? This is actually a bit of a weird one because this is actually a shark pattern. This has got, can you see that? Hang on, I'll just make that a little bit bigger and we'll bring it down here. What's the weird thing here? There's some weird stuff here going on.
What?
It's one of the exceptions. There are two entry lines here. And neither of them are at point D. So it's a little bit of a, that point D would have been back down here, most likely, in like, if you look back in time, and it's repainted and gone further up. Now, it's interesting. I've just gone through a video recently speaking about this and saying, one of the trainers was talking about the fact that, why did it go further when the lines are there and the probabilities of that? It's because there's probably something further over to the left that's already set up that this would go further. Yeah, see how that's gone up there before it's reversed and gone back down?
Yes.
Yeah. So even though, there are rules with this, and then the market or the currency pair will do whatever it does, it's just the probability of the reversal that we're looking at. Now, the one thing I would say to you, Heather, to start with, there are a number of shark patterns, yet I would say to you, please not trade any of those shark patterns to start with. Look at them, notice them, yet don't trade them.
Okay.
All right, you have plenty of other ones, bats and gartleys and other ones that you can trade. When there's a pattern of 10 sharks in a row, you can look at them, but they have an element in them that creates an extra level of unpredictability, if that makes any sense, or that the reversal will be less something that you can count on. Yeah. So let's go. We'll look at some of the exceptions as we go along, because this is just dynamic in how we're doing it. So I'll just go back to 15 minutes. We'll go back to that USD JPY one. Was it USD JPY? No, it wasn't that one. We had another one.
It was the
USD. Can't remember. Was it alternate bat?
No, That's the one you're on.
It was the one. Okay, cool. That's right. We'll stay here then.
Try EJ.
Oh, yeah? Okay. We'll go to an EJ then. Yeah, EJ be there. Just got to wait for it to come up. Okay, there we go. Oh, wow. This is a good example. Rightio. Well, it's a good example, but not a trade, not a quick fire trade as such. So we'll use this as an example of what you like, what's there, but what you don't do. So question is to you, Heather. You've got to be in IML and you've got to open up the scanner, correct?
Yep.
Good. To do quickfire. Second is, how long does it take to put all these little bits on and get it set up?
Only a couple of minutes.
Yeah, beauty. And you're only doing a couple of things. Now, this is where you can get in and have a look. Remember, we've got this entry line.
Yep.
And normally it's where D is, but D hasn't come down. That scan hasn't come down to there. And
so
then you
wait for, excuse me, Brian, sorry to interrupt.
You're right.
Do we wait for, is the D could possibly still has some movement in it? Will it move to the green line, or is that a write-off, that particular to trade? You just go, well, that's not working. It's not going to work for me.
Well, no, it doesn't have the objective components to trade. So we'll get into that. And you're correct. This one is not, from a true quick fire perspective, this is not a tradable scan or pair at that point when it came out. Yeah. And it didn't, because this scan did not repaint, which means it didn't go further and didn't have a candle touching the D, then it's, this is now gone on further. So each one of those candles is in actual fact 15 minutes. So if you count 4 of them, that's an hour. Is it? Yeah. And then another 4, that's an hour. Another 4, that's an hour. Another 4, that's an hour. Another. So we've got there's 6 or 7 hours, 5 or 6 hours there. And this hasn't repainted, or it didn't. Now, if it's going to repaint, it would repaint when the next candle comes. So this scan is basically set the way it is, and it's not going to, there's going to have to be a new scan come up for it to be relative to the quickfire. Yeah?
Yep.
Good.
Even though that particular one went in the right direction.
Correct. So,
yep.
So this
you don't know that. But you don't know that, because when you look at that, when that scan comes out,
all you're looking at when that scan comes out, you're looking at that candle there, when at that D, or the one before that really long one coming down. Yep. So the red one is, it went down. The other red one went down, but you notice there's a really big wick at the top of it, and a relatively, well, it's not equal, but it's
still a
relatively long wick.
Yep, yep.
Now, that candle tells you something, though, because it has a body in the middle, but it also has a wick up, quite a high wick, and another wick coming off the bottom of it.
Oh, and that's in that Stephen Gregor video, that 2-hour video you gave me, and I just can't remember now. There's a name for it, but I'm sorry.
That's okay. It's not. It doesn't matter. Let's talk about what the candle means, though.
Yeah.
So the candle is telling us something as well.
Thanks.
See this. Look at the candle before. See how this is a really long red one. It's got a little wick at the bottom and no wick at the top.
Yeah, that's like a for sure, definite. That candle knew what it was doing. Bang.
Well, the candle is actually, in fact, mirroring what's happening within the trades. So that is that there are a lot of sellers, people that want to sell that currency pair, and they didn't go up to buy. There weren't any buyers trying to push it to buy because there's no candle, no wick above it. They didn't force it to go up a bit and then down. It just dropped. And at the bottom, there's only a little candle at the bottom. So it only pushed up the buy just a little bit, not a lot. But overall, it was a definite sell. And we're talking about this scan, and it's not one that we would take in Quickfire, but it's really important to understand the components of this.
Yeah.
Then the next candle, which is actually on the D, has quite a large wick above it and a slightly smaller wick below. And it's only got a little body in the middle. So what would that say to you?
Oh, well, I'm cheating because Dan already pasted it.
You could have just taken the credit. I'm being nice.
I know, but I'm just not that kind of person. How bad is that? Indecision. It's when it's not, the market's not sure which way it's going to go.
Yeah.
So with that long wick on both ends and a very short body, the market could go either way. So
yeah, you don't know. That's right. So again, it's sort of not giving you any indication of what's happening. Yet let's look at it also in that indecision. It was indecisive more about buying than it was about selling. So the selling bit is below the candle. The buying bit would be more above the candle because it pushed up trying to buy it. The market said, no, all this is sold. I'm going to try and buy it. I'm going to sell. And then I'll just sell a little bit.
Is that what the wick is?
Yeah.
Oh, okay. Yeah. So that longer wick is showing us more on the buy.
Because it went up. It went up to try and buy. The market tried to force it to buy, but it pulled it back down to be an overall sell for that 15 minutes in that candle.
Yeah, and then the bottom wick's not quite as strong as the top wick, so it's...
Yeah, but it's still there, and it still pushed it back down to sell, and it came up to the middle overall as a sell.
Yeah.
So, this is what time takes when you're trading to go looking at these candles. And so Dan's absolutely right, and you are too. It's indecision. You don't have a clue which way. Even though that tried to push it to buy because it had that big sell down, and it tried to sell, but it couldn't. It got pushed back up. But overall, there was a little sell. Where if you go to the candle before, it was a big sell. It was like the market was like, we're going to sell this currency pair, and that you're not going to have any buying element in this. We're going to sell. All right?
Yeah.
And let's look at that then, as in, I'll show you a tool. Over here, there's a little measuring tool. So if I click on it, and I go to the top of that, and I click it, and I come down to, mucked it up. Sorry, I'll do it again.
Hold shift and click.
And then I come down to the bottom, and I click. That is now, that's 46 pips.
With is displayed as 463 points. Which,
yeah.
10 points to a pip.
Well, let me do it the other way too. So you can actually have it this way. So I'll go from the bottom, not the wick, the bottom of the candle, to the top of the candle, and I'll click that. Now you'll see it. It's in a plus, not a minus, because I went in the opposite direction. So you just click. So if I want to get rid of, I'll show you. This is really cool because I under Dan's instructions. So if I click in a white space here, it'll get rid of it. And I just go back over, click on that, click on the bottom of the crosshairs, go to the top of the crosshairs, click and come away, and it'll keep it there. All right? You need to use this measuring tool, and I'll show you. This is just one thing. So that was 47 pips it dropped in one 15-minute time frame. One 15-minute time frame, it dropped 47 pips. Yeah. So that's just a measurement. So again, you might want to look. So the first rule of Quickfire, and we're going to use this for a couple of things. The first rule of Quickfire is though that the point D and the candle and or wick, but it's for me, one of my sort of, extra confirmations is the candle touching or breaching the point D. So I'm just going to go over here and do this little zoom tool, and I'll show you. I'm going to just make like a little box, and I'm going to let go. And can you see what it's just done? It's zoomed it so you can actually see that a lot closer.
Yep, it's right on the D.
Well, no, it's not.
Well, the candle's not, but the wick is.
No, the wick's on D, but it hasn't breached this entry line, this green line.
Yeah.
So that D will always have a wick or candle on it. Yeah, I'm pretty sure it'll always have a wick or candle. We'll look if there's any exceptions. But that D has to also either touch or breach, which means that that candle and or wick breaches, which means it goes through or touches that line. And at the moment, it doesn't breach or touch that line. So rule 1 is, does it breach or touch that line? That was a question, Heather.
No, it does not, Brian.
So it's not a quick fire trade.
I think Heather's used to your teaching style, Brian.
Yeah.
Absolutely.
Well, and also too,
together at times.
and also too for the people watching, and also people watching replay, it really is a reinforcement through this process. And like, it might seem slow, yet once you do this, it's like, it takes you 5 minutes the first time or 10 minutes to put those things on the chart. After that, you just do it without even looking sometimes, or as I said, remembering what those numbers are.
Well, that's right. Like driving a car, go from first, second, third, fourth, and you don't.
But that hasn't breached it. But there is a little bit, and you're absolutely right. That did go in the correct direction, but you didn't know. And so, what are we trading? What are we trying to trade with, though, Heather? A higher percentage of
probability.
Absolutely. So that's the thing, is because it didn't breach, it didn't mean it wouldn't go in the right direction. It just means it has a lower percentage of probability. And from a very good friend of mine, his comment has always been, I only take great trades, not good trades.
And you don't want to, and I've heard it said in the IML world with different traders, it's like gambling. If you don't, if you go outside of those, like for instance, yes, that did go in the right direction, but again, you did not know that. But if we stick to our probabilities, our high probabilities, you've got a better chance. Like I think it's like an 85% chance of it going in the correct direction. Otherwise, now you become a gambler. You are guessing that it's going to go in the direction you want.
Correct. Very good, Heather.
You don't want to gamble. That is not the name of this game.
Yeah, the gambler will always have loss at the end.
Got to know when to hold them and know when to fold them.
Yeah, correct. That's exactly what we need to do here. So to get back to the chart the way it was, I just go over here and click on this little minus, and it'll bring it back to what it was before we zoomed in. And you could zoom in further if you wanted to too. Now, it's a bit clunky at the start for someone using this. That is okay. Just play around with it, and it'll do funny things, and you'll learn how to get in and out of it. Now, yeah, this is not a trade we take, but I want to show you one more thing while we're here, that also, even though it doesn't qualify, it's something we do need to measure. See this? Can you see C to D, that sort of leg down that side there?
Yes.
If we take our measuring tool and we go from the C and we click it, Brian, what are you doing? We go from C down to D, and we look at that. That's how many pips is that?
That is.
Have a look at the end. Remember, that's points. So you take off the last one. So
76.
Yeah. So even though it says minus, I could even do this, and we could go from the D back up to the C.
Yeah, that doesn't really matter, does
It's
it?
still 76, right? It's interesting too. It tells you here that it's taken 1 hour and 15 minutes to go from there to there. There's some great information in this as well. So that's 76 pips. it really is under the amount that we require to also give us a high percentage of probability. So, for example,
can I just add something quick?
Go for it.
For anybody who's watching and watching the recordings, when you're doing this and measuring C to D, my advice is measure the green line to take profit 3, right? Because take profit 3 will be C. The green line you're wanting price to hit. Obviously, at the moment, this isn't a qualified trade, so you wouldn't take it anyway. But as the scan appears on this chart and you're watching D move, D will be moving. So don't measure from D, measure from the green line, because you're wanting it to hit that, and that's going to be your minimum.
Correct.
So green line, not D.
So here's if it did go and touch the green line, this is 81 pips. So let's imagine this D point and the candle or the wick touches that green line, and up to point C is actually 81. So 80 is the magical number here, a minimum. Okay, Heather?
Yep, that's good. My dog's just having a bit of a bark attack, so I just mute myself.
No, that's fine. It's okay. It's not a problem. So just remember, this is even though this does not qualify as a trade as such, because it hasn't touched the green line at point D and the candle or wick, is it? It's still, if it did, it would have sufficient pips to actually consider it if it did actually touch it. Okay? So that's a sort of another measuring thing that you need to do. And just, Dan, remind me that when we get to the chart that we do have one that's got over 80 or 80 and it does touch D, that we actually explain why. Yeah? So let's then go to let's go to a different chart, because there's other things here that we need to. Oh, actually, what we might do here, and this is just to muck with your head, if we were to go from there and up to where the current price is, that's 54 pips. So it did go in the right direction. It's 54. So I'm just playing with you. It doesn't matter.
Don't look back at trades you didn't take.
Yeah, correct.
It doesn't matter. Then you what you want to do is stick to your, whether it's 5 or 10 pips, and get out of that. Once you've got it, even if it went 100 pips, it does not matter.
Correct.
You've got your 10 pips or your goal for the day, or not, probably for the day. I think it's, they say 5 pips a day, 10 pips a day is a good average. So just get out there, eh? Don't worry that it's gone on to 100, 200. You've got your pips. Be grateful, be happy. You're on track.
Because you are talking about like QF basic at the moment, aren't you?
Yes.
So in that case,
yeah, not the 15. What was that?
Right, for me, it's QF 15 should be basic.
Yeah, I agree.
Don't bother with anything less. There's an 89.33% chance of it getting to 15%, so just go with it.
Yeah. We'll talk about that in a minute.
Yeah, but yeah, don't get in the trade. Just get to 15%, get out, done.
Yes.
And like you say, don't look back on what it's done until you know more advanced things. Then you're only just going to go, oh, but, and then you'll start thinking about staying in, and when you shouldn't, and you'll trip yourself up and fall over.
Yeah.
And when you're on that horse and it really starts going like hell and you get thrown off, it's not a pleasant experience.
No, it's horrible.
And it's much harder mentally to get back on the horse after you've been thrown off several times.
Speaking from experience?
Yeah, we all can, all three of us can speak from experience. Let me just have a look. Oh, yeah. Hey, wow. We got 6 people watching out there. So thank you.
That's okay.
No. I think that this is actually not covered anywhere that I really know of, other than having to be inside. So I think that's a, yeah, this is why I sort of wanted to do this morning and that.
No, this would be a great video for people to look back on and
yeah, absolutely.
covering it a little bit more in depth and simplifying it.
Yeah, and I'll put this up into YouTube too, and so people can have a look at it as well.
Yeah,
so thanks, Dan, for your input. I really appreciate, you know, those extra bits, and I mean that's what training's about. I think it's having, you know, some different viewpoints, and someone, Heather, like yourself, wanting to know what's going on. I mean, that's really, and for you to advance your training and understanding of it.
And thank you, Brian, for your time, and that you're recording this so that not just myself and Dan, well, Dan doesn't really need the training at the moment. He's one of the trainers with you. But thank you that you are doing this so that multiple people can see it. You're not just doing a little Zoom with Heather on her own and everybody else misses out. So good on you, Brian. Thank you so much.
That's okay. It's no pleasure. So, and look, you know, people say this quite often, and teachers know this. It's the people that can actually train other people are the ones that solidify the knowledge in what they're doing. So let's go to another scan. Let's go through the list, and let's start just being, you know, not random. And so I want to show this as well, Heather. If we look at this, the scanner has been a little bit finicky is probably the word, or a little bit sort of difficult at times. And so normally in these scan M15, so that's 15-minute time frames, they normally are the newest one, or the one where the candles are closest to the point D are at the top. It used to be a little less reliable, but it seems to be more reliable now. So let's just go through these and look at just the first parameter. So I'll go to this one that we had at the start. For example, is that this is a weird one. Remember, it's shark. It's going through both entry lines and it's repainted. Probably we wouldn't touch it at this point. From a basic, whoops, I'll just pull that back down. From a basic quickfire strategy, this has a few extra things that need to be considered and is probably not the best type of trades. When you're learning to do quickfire, just keep away from them at the start. Okay, it's just there are other ones we need to look at. So I'm just going through the Pepperstone ones here. Let's go down to the next one down, which is USD JPY. This is the alternate bat. Oh,
that's a good one.
Well, I don't know. We'll see. Let's have a look. I'm just going to pull this MACD down, and I'll pull this RSI down just a little bit. All right, here we go. Now, this has progressed on, of course. We'll just pull this over a little bit. Each one of those candles is worth how much time, Heather?
15 minutes, Brian.
Good. And so there's 1, 2, 3, 4, 5, 6 or more hours have gone by. So it's not a trade we're going to take, because where do we need to get this chart to really take a quickfire trade? Where do we need to sort of observe it?
The D.
When do we need to look at this scan? When do we need to see it to take advantage of a quickfire trade?
Do you mean when it first comes up on the scanner?
Very good. Spot on, Heather. So that's why Dan and I subscribe to that service, because when it comes in on our Telegram is when it hits that, or just before it hits that D point.
Okay. We can talk about that. I'll talk about that with you later. I might do that.
Yeah, no, that's quite okay. And so that's why I want to say this is a little bit after the fact. And so let's imagine that we don't, from this second blue candle, so, this D point, you've got a candle. Imagine that all that there is not there. So try and not see it. But,
stop it.
I mean, I don't know. Actually, Dan, I think we can use a cover somewhere there maybe, but I'm not going to do it. It doesn't matter. And so first things first, what do we need as a rule for Quickfire? What was the first rule?
It has to be touching the D. The D, yeah, the kernel has to be touching the D, and it has to be touching the green line or past it.
Now, okay, so this is the D point. It's past, the D's actually through and past that green entry line.
Yep.
And the wick is quite long, and it goes through it as well. So does this start to qualify it? Is this denoting the start of a possible Quickfire trade?
Well, if we were talking about earlier about the short body and the long wick and that, is that an indecisive wick, that one? Would you class that as an indecisive wick?
No, not necessarily. Well, it does have a long wick underneath, but it does go through. So in actual fact, that blue buy did actually come down and was down here, but got pushed back up a bit.
Righto.
Overall, that is a very good. I like it, Heather, how you are looking at this. That actually is an overall buy. It's not a red sell. So it is, the market is wanting to buy. It just, that long candle down is people tried to push it to sell, but the buy took over.
Ah, okay. Gotcha.
So the buy is in actual fact probably, overall for that candle is stronger in its indication at that point in time than the people that wanted to try and sell it.
Okay.
And the wick, there is little or no wick above it. So it didn't sort of try to push anywhere further, but it did keep the buyers away. But it's not a big sort of like, wow, a big blue candle, you know, it's like
the red ones next to it.
See this one over here?
Huh?
Over the left of the, see over here?
Yeah.
Over see point X and then this big blue one? That was a big buy. We don't have that here,
No.
but it still is an overall buy.
Yep.
Okay? So in actual fact, this qualifies. This starts our journey to see whether we're going to take this as a trade or not. It doesn't mean we are. It just means we're going to look at the other components.
So then is the next step measuring from the green line to the C line?
Very good. Well, in actual fact, I would measure from D because it's breached that line.
Yeah, but you haven't entered, but you haven't entered it yet. So you would only, would you enter now? Or
no, see,
got to come back up.
Let me do this. Let me do from there to there. That's only 37 pips.
No.
And even if I went from, the green line to there, that's only 35 pips.
Nope.
So that doesn't qualify because it's not 80 or so pips.
Yep.
Correct. Very good.
Next chart.
Yes. Right. Let's go to the next chart. So can you see what we're doing? We're building up and qualifying the components. So let's go next. That was alternate bat. We'll go now. Oh, we went to EJ already. That doesn't qualify.
Settle down, girl.
This is Bartley.
No, move on.
No, that doesn't. Straight away, you can see that hasn't touched that line.
It's just the fact that it's tiny.
Yeah. And that's a tiny number of pips there, so no good. So then we go down here and we go NZD CAD. Oh, this is an interesting one. Oh gosh. This is good to see. Right, I'll just try and get that into the picture a bit better. Rightio. All right, Heather.
Righto.
Let's look at this. Oh my God, what's this? This is New Zealand dollars, Canadian dollar, a butterfly. So that's a butterfly pattern. So first things first. I'm just gonna get this little zoom tool, and I'm gonna just zoom into that bit there. So what have we got? That's point D there, and that's the candle, and that's your entry line. So the rule is what, Heather?
That point D has to be touching or above the green line.
No, not above. Breach, because it could be the other way. So it has to go through or breach or touch that green line.
Okay, sorry. And then
it's not necessarily point D, even though D is relevant, it's the candle or the wick needs to actually go through.
Yeah, because point D has decided to stop moving with price.
Correct.
It's given up halfway through.
Correct. So the scan, remember the scan is just a scan. It's a computer making some scan. Price is doing what it wants. So even though you're looking at point D, that's okay as a reference. It's more the candle that goes through or the wick. Now, this candle went through. Now, remember I said to you, one of my sort of finer points of Quickfire is the candle actually goes through, not just a wick.
Yep.
Remember the other one, it had a little body bit and then it had this long candle. And yes, it went through D and through the green line, but it was only the wick.
Yeah.
For me, a higher probability is when the candle actually goes through it.
Yep. So when the body.
Yeah.
Goes,
Yeah. Not just the wick. Yeah. And you'll understand why from what we've said before of why that would increase that probability.
I'm completely the opposite to you.
You are, yeah, exactly. So, but for me, that's how at this point. So this has gone up, and in actual fact, this has even pushed through the projected or the stop loss that's been set here for this pair. But we'll talk about that in just a moment. So has that breached or gone through that green line for D?
Yes, it has.
Good, lovely. Now I'll just go back. I'll click the little minus.
And then you need to check how many pips from the green line to C.
I can see straight away. So if we go from C up to the green line, that's how many?
80.
Once price has breached, you need to measure D. If you're watching a scan as it's forming, then you just measure the green line. But
yeah, so that's right, as it's forming, but then it's already gone to there, so that's where it's.
You do it from the D there.
Yeah.
Friday. Yep.
Yeah. So if I click, how many pips are that?
That's 95.
Yeah. So has that sort of gone the next step?
Yep. So the next that was the next step. So what's the next step?
There we go. Hey, we've got past the barrier.
So there, yay! Looking like we've got a trade happening.
All right, I'm just going to pull that out a little bit, and I'll come back over here. So I'm just going to try and highlight. Let me just get rid of. I'm going to imagine. I'm going to pull them across so as if they're not there, as such. Now we're going to. Oh, that's going to make it harder, isn't it, Dan? But anyway, now we're going to look down here at the RSI.
Well, you've got another thing on your main chart to go.
Oh, yeah, sorry. We will do that too. Oh, that's really good, isn't it? So remember the thing that we put on this chart before? We put these things called Bollinger Bands. And remember you have an upper or an outer one upper and a lower, and you have that red line in the middle?
Yes.
One of the next thing we can look at is, does the price does the candle and or price, which is the same thing, go outside of that outer Bollinger Band?
It does.
Is it outside of the blue color? That's a big tick.
Yeah, which means it's really been overbought.
No. The RSI would say that. More like, no, for me, that I use Bollinger Bands as I call it the rubber band. If it goes outside, you overstretch it and it's got to flick back and come back to the middle.
Oh, okay.
It's highly likely that it'll come back towards that red line if it goes outside of that blue area.
Yep.
And it was described to Dan and I a long time ago by someone that sort of talked about this as the price being a little child. And the red line is their house where they live at home. And the blue section is their backyard. And a couple of kids, there might be more than one, but the price is really only one. And the child loves to be at home, but loves to adventure out into the blue backyard and play and do stuff. Out into the white, when you go past the blue, you go out into the dark forest. The scary dark forest. And somebody might say boo to them, and they run back again into their backyard because they're scared. And they want to go back, and they run back to their house normally or to the other side of the yard. So that's the sort of analogy for Bollinger Bands, either rubber band or a kid in the home in the backyard stuff and running out and back again. And you'll see that in actual fact, if we pull this across, you'll see in actual fact.
Zoom out, you'll see it better.
Oh, yeah, we'll do that. Okay. I'll do it that way. Can you see the Bollinger Band? The little kid went out in the forest, really scary, and jumped and then came back and then went a little bit out and played in the backyard, then come back and is actually going on to the other side of home now towards the other part of the backyard. So that's, if you look at trading, these patterns occur all the time. You can actually see here. See how this little kid went outside the Bollinger Bands there and then raced back and came back to the middle, went to the other side, then ran in the middle, then went outside a bit, then back again, back to the middle, back to that, and then out, and then back again, back to the middle. It's just it just goes on and on. See here, go out of this lower one, back again to the middle.
The important thing is to note that just because we say it's going to go back home doesn't mean it's going to go down or up. If you look from B, it just goes straight across to the middle.
Yeah.
So you're not necessarily, don't just go, oh, it's gone out, I'm just going to buy or sell. There are other things you need to take into consideration, but because it might just, if you're just trading Bollinger Bands, then it might just go straight across and you're just not going to do anything.
Yeah. And depends on the market and what it's doing.
Yeah, Bollinger Bands are just one of a few different things that you have to consider, isn't it?
Yeah, but it's also too that they're lagging indicators, so they're things that happen after, in a way, so you can't have a predictability or probability for it. So the next thing that we're looking at is at this point D, if I put my cursor there, right, in actual fact, if I put it there, and now I'm down at the RSI, can you see down there, Heather?
Yep.
And I go to there and touch that point, go over, I'll go, look at this number here when I touch that point.
Yep.
What's it say?
75.3040.
74.2335. So no, you've got to go over to the.
She's looking at the right.
Yeah, she's looking at over on the right, and that's okay. So you're looking over here, and I'm saying look over there.
Oh, sorry.
No, don't be sorry. You haven't done anything wrong.
All right. So what's that over here then?
That is the value of RSI at that time.
Correct.
Oh, right.
The value of the currency. It just happens to, or the RSI at that time. That's right. But it's 74. So my question to you is very simple. Is it over 70? Because at the moment we're looking at this selling or retracing into a sell, which, as you said, it's being overbought. So more than 70 means it's a slightly overbought situation. So does 74 qualify more than 70?
Yes.
Yeah. So, there's another tick. So what do we got here so far? We've got it's breached the green line at D and that. It's outside the Bollinger Bands. It's more than 80 pips up that C to D leg. It's over 70 on this RSI. Wow.
So is the RSI the second? You know how we're going through. So one was does it hit the D or breach the D? Blah, 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 blah. Is it 80 pips? That's one. What is two? Is two the RSI?
No, Bollinger Bands.
Two is Bollinger Bands.
Well, I mean, you can swim around. It doesn't matter. It just they're in that sort of process. It's not necessarily one higher priority than the other.
And then the next one's this one, the third
It's
one.
RSI. Yeah, the RSI is sort of like the next type of indicator that you need to tick off. Yeah.
Overbought or oversold.
Yeah. So if this scan was the opposite way or inverted, and the stop loss was below and the take profits were the other way, you would look at this being below 30. And we'll see if we can see it exactly. Does that make sense?
Yes.
So then not every trade will be that it's got to be more than 70. Some will be that the scan is the other way and they'll be under 30. All right? So these are things you need to tick off that must be there. If they're not there, this is not a tradable trade from a Quickfire basic perspective. Now, the next thing, Dan, is divergence. Is that correct? The old Jed Rich sort of...
no, not Jed Rich.
Well, Jed had... Wasn't it Jed
Yes,
had...
but Jed did it wrong.
Oh, okay. Well, he had the words. He just did it another way. And also, I think we need to give a bit of credit to Paul Turner for coining the phrase Quickfire. The history of this is that's his word, actually, for this. Very interesting. So
prior to that, it was just weird nightmare.
Yeah. So let's look now, and this is where people sometimes don't really understand how to create this divergence, whether they use the points of the chart. I've seen some people, so if I go up here into this trend line thing up here, it's up on the top left, just looking for a line. I could click on that and it'd open up, oh, did it? No. Yeah, open up things. I can get a trend line or horizontal, all that sort of stuff. But if I just get a trend line, which means I can draw it on any angle that I want. Some people think you go from C to D and then you go from there to there on the RSI or the MACD. But it's not necessarily true. Where do you go from, Dan?
Right. Stop there.
Yeah. So
to the top of the wicks at D.
Yeah. So we go from here. Do you want that one or the D point?
No, well, just take them both as a straight. They'll both be on it.
Okay. Whoa. Stop that, Brian. Let's do the next one. So you can see that line in there. We could, if we wanted to, bring that back down to the D point. It really doesn't matter. It's still in an upward direction, okay? Then what we're going to do is go and grab to do another trend line. And we're going to go from, see where I put my cursor? You're going to do the RSI one, Dan? Is that all right if I do that?
Yeah, there is no divergence on MACD. However, you've got hidden divergence within the RSI. So
yeah, correct. I'll just grab that now and go to...
No, you're not.
There? Oh, I didn't do it. Oh, there we go. All right. Oh, get off with ya. I'll get to that one. Sorry about that, guys. It's just it's like anything playing with these. In actual fact, this web scanner TradingView skin is nowhere near as user-friendly as just TradingView, to be honest. Even though it's the skin, it's still a little bit interesting. So if we go MACD down here, about there, Dan?
Yeah, yeah.
And then we come up to, what the, get out. Bit of pain in it.
So the MACD is opposite to the RSI.
Mm.
And the RSI is opposite to the, so it's a divergent, the RSI is a divergent, isn't it? Because
yeah, so let's talk about this as in, let me go like this. So I'll do it this. These lines are parallel. These lines are divergent. These lines are divergent. So if the lines are going in the same way like that, or the same way like that, or the same way like that, there is no divergence.
Yep.
They need to sort of go away from each other or towards each other.
It needs to be a divergence, doesn't it?
Well, it is a good indicator. Now, I don't know, Dan, you know MACD probably better than I, and I've listened to the training, but I can't remember. I mean, I actually rely on the MACD much more as a divergence than I do. Oh, what the hell is that doing there? I rely on the MACD as a divergence much more than the RSI being a divergence. But I'm showing you two here, two different indicators, both lagging indicators of the possibility. Now, this creates a bit of confusion in people. It's like, well, which one do I trust or not? One's got divergence. So this is a single indicator, trend line, which shows you that it's going in an upward trending direction, correct?
Yes.
Good. This RSI one across the same time frame is showing you a slightly down direction. So they actually are going away from each other. Yeah, one going up, one going down.
Yeah.
That could be saying there is divergence, yet that's going up, and on MACD, it's also going up. So I just wanted to clarify this. Remember the setting up that we did with MACD right at the start, Heather, and we turned the MACD into this histogram with lines. It's not this red line. It's these blue little pillars that we really need to go from to.
Righto.
Now, Dan, your understanding of MACD.
I haven't got any.
Okay.
I use it to show divergence. If it's not there, I'll look at the RSI.
Yeah. Okay.
If there's divergence on there, then...
So my understanding of MACD is MACD has my memory of training is the MACD has a higher priority than actual fact the currency. Well, this is what my memory is that if there is divergence between MACD and the currency pair, the MACD would have a higher probability of direction. So this doesn't tell you that it's going to go into a sell. Does that make sense, Heather? Because if this histogram dropped down below, and if you look there, see where that drop occurred there, in the MACD, it dropped below that midline. See that midline, and it dropped down?
Yeah.
None of this is dropping down. It dropped down before, and then right at that point, see how it was going down, and then it went massive up, and then it started going down, but there was still volume in the trade that it didn't push it below that midline on the histogram.
Yeah.
You see that's the midline, 0 over there through the middle. So that's how I interpret it as such. It's just a little bit more fine tuning and interpretation.
Yeah. I think...
Does any of that make sense to you?
Just personally, that MACD, that would confuse me now that it's gone the opposite to that. I would, and I'm just saying, I'm speaking it out because there might be other people watching this now. Like when you first did the RSI, I was like, yes, that's a divergent, and I was sure.
Yeah.
As soon as you threw this in and you said about the MACD, I was like, well, no, that's now just throw me.
So
I
Heather,
would be
then,
indecisive.
yeah, and that's okay. It's all right then if you are in relation to that, though. So what Dan has just said, though, and look, I still want you to put a trend line on both of those indicators. Yet here we go with it. If, for example, that indicator on the MACD is not divergent, but it is on RSI divergent, then that's okay to take that, right? It has still, we've got all these other things that have sort of defined a higher probability, which are really good. Well, you know, just think of it from the point of view, this has gone on a massive buy. What is the market going to tend to do anyway?
It's got to come back.
Well,
Anything
it's going to retrace.
Overbought or oversold,
Yeah.
it can only do it for so long.
Correct.
And it's got to come back.
Yeah, over time, that's right.
Over time, though, it doesn't mean it's going to happen right away either. You've got to be careful that you don't misinterpret what I just said, that just because it's overbought, because I've seen them continue up and up and up and up and up, where it's just going up, down, up, down, up, down, but it's going on a trend that's...
Well, that's when we're falling off the horse.
Yes, and I hit my head really hard on that one.
Yeah, remember to put a helmet on.
Oh my goodness.
So the thing about it is, let's go through these things. You know, again, one, has the actual candle at point D breached through that green entry line?
It has.
Yeah, great. Where is that C to D leg, or that sort of is it more than 80 pips?
It is.
Okay, so that's good. It means that there's enough movement there that the retracement that Dan spoke about would actually be worthy of us getting into a trade with this.
Yes. Well, your first one you've ticked off. How many out of the 4, Brian, that we've just noted do we need to have for it to be a goer? Because it's not 4 out of 4, is it?
Well,
or is it?
Think of it like this, Heather. What would be the highest probability of it going the way that you're actually putting a trade on for?
Well, 4 out of 4.
Very good. Very good. So if you do less than that, is the probability less?
Oh, it's a bit lower.
Yeah. And if you do less than that?
It's lower again.
Yeah. So there's your answer straight away.
Oh, slap me up.
So if you watch Steve's session on it, he talks about needing 2 of the 3.
That's right.
However, whilst you're starting, just be picky until you know a few other things that will help you ignore certain things, because you'll have other things going on. Whilst you're just getting into it, just have them all.
Yeah,
it's a lot easier. The only thing I will say again is divergence. If it's there on one of them, you'll be fine.
Okay. Now,
it doesn't have to be on both.
I do have a question about the name of this. Do we call this a strategy? Is Quickfire a strategy?
Yes.
Yes.
Right. Okay. So Quickfire, in my mind, it gives me...
Doesn't mean it's going to be 5 minutes.
No, that's right. Because in my mind, I would think, oh, it's Quickfire. It's a what did he call that one? Where you scalping, like it's scalping, but it's not, is it? This could go from anything from straight away to a few hours, would it?
Could do.
A day.
Again, Heather, you're asking a question that can have several answers. So
yeah.
But ultimately, it's not a scalper's. If you're a scalper, it's not.
Quickfire was called Quickfire. Basically, this was the strategy, right? Is there a scan? Is the next candle red?
Oh, okay. Okay. So it's the points, like bang, 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 bang. Yes, we take the trade, and that's it. Okay, gotcha.
The guy who came up with the first thing, his trading was literally looking at this chart now. Was is there a scan? Is that next candle red? That was it. He'd get in, irregardless of anything else.
Yeah.
I'll be 2 seconds.
You're right. You're right. No worries. There's a refinement though, and I want to answer your question, Heather.
No, that's all right.
You're right. This can go from 5 minutes to a number of hours. Yet remember what we spoke about, and you even mentioned it. How many pips are we looking for?
Between 5 and 10 a day.
Very good.
Per day.
Yeah. So
that could mean just one trade a day.
Correct. It could mean one. That's exactly right. And so this is where Dan comes in. Be picky. Be very, very picky at the start. You know, this is something that you want to have for the rest of your life. It's like a relationship. You're going to be picky.
Absolutely.
It's a long list you need to tick off before you're going to live with that person.
Exactly. Listen, another question, just to clarify some things as I'm going through it. You know how you've got your take profit
TP
one,
1, 2, and 3. Yeah.
Right. So obviously, take profit one has the highest probability.
Yeah.
And possibly, you know, when you measure from the green line to the take profit one.
Yeah.
On the chart itself, are we going by those numbers? Like if I was to go onto my MT4 now and I'm going to put a trade on.
Yeah.
Okay, so we go on there, we go, okay, it's gone through the green line now at that red candle's gone through. Right, I'm going into this trade now. So once I hit that, that'll be my entry point, which won't be exactly identical to that entry point because I've gone in at that when I've gone in.
Yeah, you could have gone in. You could have gone in above. So that entry point is 0.92041. You might have gone in above it, 92164, and you can see it even pushed above. You might have gone into negative, and then it will start to come back down again.
All right. And
so that's right. But in actual fact, you're talking about what you would do as when you get in and you take profit. Correct. You would put that in a trading station or trading terminal or your MT4 on your phone. Absolutely. You have currency pair up and you'd be looking at this. But this is, remember, when you see the chart, when you see that first candle after it breaches the D, this is where you're sort of onto it at that point. Now,
the D, and if the D is obviously above or below, depending what it is, the green line.
Yeah.
But then with your stop loss, just to also
we'll talk about that in a moment. Stop loss we'll talk about in a moment.
Okay. All right. So then you can do you just set up so you've gone in, bang, all right, 5 or 10 pips, whatever you're going for, you just go 5 pips. You don't have to look at this chart here and put that number in, do you?
Okay, so there's a couple of ways of doing it. Let's talk about, we were talking about basic, we talk about Quickfire 15, and as Dan said before, QF 15 is really basic, but we'll go from there. So within basic, you would probably put, if you wanted to, you could put your TP1 in, and exactly as you're saying, you would put your stop loss where, this is actually quite a unique trade in actual fact, that punching back up through the stop loss amount. Yeah. So your stop loss would have to be higher, or you would wait for it to come down below in the next candle before you got in. So there's a couple
I think I would wait for that.
I mean, Dan, we're talking more advanced that we would go out and then we'd go back into a trade. What are your thoughts?
What are you saying? I've missed what you said about stop loss.
Okay, let's just no. Heather I'm just going to hone in on just this one little section here. Well, actually, we'll go to there. Heather was saying, for example, on her MT4, tell me if this is correct. It depends on where you get in the trade. So this blue candle would be, and this red one would be starting before you actually get in. You might even get in on this next candle. It's okay to actually get in, wherever you feel. Remember the big quote I've kept saying to you, Heather, it's all about the entry.
Yeah.
Okay. Now, for example, if you had have got in, you see this breaching that and it goes up D and you get into the trade there, it would in actual Yeah, well, that's if you put a stop loss in.
Yeah.
So we'll talk about the mechanics later, but you may not have any time to put a stop loss in. That would actually push further up and come back down again. So that's been a sell overall, but it tried to go up through a bit of buy, but the sellers pushed it down. That's what it means. That's what that candle really is saying. If you look historically, if you were here watching that 15 minutes, you would see it going blue, 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 red, 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 and go down, and it would finish off with that red body, and it would have tried to push down. See the candles below a bit? It would have tried to push down there a bit. And then it finished in that sort of middle. But it tried to do that buy, but it couldn't because it was exhausted because of all of this massive buy that it did there. So now it's got to, well, not has to, but it's most likely it comes down. So you would either get in somewhere before this trade finishes or in when this next candle starts. So yes, you could put your stop loss up there if you wanted to. So let's just look and see how big, say for example, I get in the trade where that green line is on that candle just here.
Yep.
So how many pips is that up to that stop loss?
15.
Very good. Yeah?
Yeah.
So let's click off that. How far up, though, did that go? So let's just click on measuring tool and we'll go, say we got in on the green line and the top of that is
4.
4.9. It's about 5 pips.
Yeah.
Yeah? So if we had a 10 pip stop loss, okay, so that's actually quite safe. But if it pushed up past it, we could get out, you know, at 3 or 4 pips if we wanted to. If we were a bit concerned when it came up here and it was coming close to the 10, we could actually get out if we wanted to ourselves. But we're not at this point. That's just mechanical. And then what Heather said is she would put TP1 as a profit. That's what she said, Dan. Now your view on it.
Right. So entry for, I know there's a number of different things that are taught throughout various videos. But what I would advise you do is whilst you're watching this trade go on, you will see a timer on the right hand side where price is lurking, and it will tell you how long that current candle closes.
So over here, sorry, Dan, I'll say, see that red dotted line that's got that red, 0.91689. Below it is normally, I think it's green, isn't it, Dan? There's like a green thing which gives you a timer.
No, it's the same color as the line. So
same
if price is going up,
is it?
blue,
okay,
and the timer will be blue. And if price is going down as it is now, it's red. Timer will be red.
Okay, yeah. So there'll be a timer saying how much time's left for that candle.
Yeah. So what you want to do is, as price at D is painting, and you'll see the timer go. What I want you to do is on your trade station, go onto your 5-minute chart. Once D's closed, then you watch one 5-minute bar. And if it moves in your direction, on that close, you get in.
Does that make sense, Heather?
Okay, so let's try and clarify.
So what you might have had, like for example, in this one, that first 15-minute candle after the thing has got a massive wick up to the top side.
Yep.
That could have been the first 5 minutes, right? Yep. So you wouldn't get in. Okay. But the one after that might have been a good 5-minute candle to the downside, making that a wick essentially. And you'd get in on that. And then what you do is have your stop loss 10. Your stop loss should be 10 pips from D.
Yeah.
Irregardless of where you get in.
Oh, 10 pips from D. Okay.
Yeah.
Thank you.
So if you're getting in like 5 or 6 pips into the trade, you're stop loss will be sort of 15, 16 pips, which is why you want to start with a 5 minute so that you're not waiting too long. You're not waiting for an entire 15-minute candle to close. And then your TP will be 15%. Just to start with. There are other once you're used to it, then you can worry about your TP1 as your take profit 2 and etc.
Yeah. No, I think I'd only be interested in the take profit 1.
Bulk standard.
Yeah, bulk standard until you're very, very, very consistent.
There's don't even go for TP1. You want to just go for 15%.
I will explain that now, Dan. I think that's a very important factor, and I wanted to come to that now, Heather.
Explain to us all how you would work out 15% of.
We'll do that. We'll do that now. We'll do that now, Heather.
That'd be great. That'll help.
That's an easy thing to do, and we'll look at another tool that will allow you to do that simply and easily. So people might ask, why is take profit 1 there? Why is take profit 2 there? And why is take profit 3 there? How do they determine where these things sit? And they are all in relation to the C to D leg. And they are based upon Fibonacci. So that's where we can now, and that's why, for example, remember at the start we looked at, is that more than 80 pips? Because what Dan's talking about, that 15%, we need more than 80 pips for 15% to add up to a number of pips. So, for example, let me just get my calculator.
80 pips is 12 pip.
Correct.
Is it 15%?
Multiplied by 15% is 12. So it relates to 12 pips. Now, Heather, how many pips are we looking at wanting to get out of a quickfire trade?
5 or 10. I'd say 10.
Let's say 10.
Yep.
So if you have 80 pips up the side and you to get in a trade on or near D, and it retraces or comes back 15%, that's 12 pips. Is that more than your 10?
No, because you've got to allow for the 2 pips. There's 2 pips that are.
I love you, Heather.
You're on it, girl.
In the spread. So depending on which broker that anybody's with.
So my advice to people.
I think
my advice to people has been to, whilst you're starting, is to look for upwards of 100. So there's a couple of reasons why. Say again.
Instead of 80, do you mean instead of 80, upward of 100?
Yeah.
All right.
So the reason I say that, and I mean, you know, this is down to your flavor. If you want to go with 80, that's fine. But what you need to take into consideration is 80 pips is a 12 pip return. Yes, okay, there's a chance that it will go further and whatever, but just bulk standards, take the 15 whilst you're learning, right? 15% of 80 is 12 pips. You're going to lose a couple for spread.
Okay.
You're also going to lose a number of pips waiting for that 5-minute candle.
Correct.
So let's say that 5-minute candle is 5 pips, then you've only got that sort of 5 pip movement. If you're up 100, then you got 15 pips. So you're giving yourself a little bit more of a leeway to take out that 5-minute candle that you're wanting to confirm your entry.
Okay.
And this also comes back to a risk to reward. We need to speak about that. Is if your stop loss is 10 pips and you're going to gain 10 pips, you want the highest probability of those 10 pips to be there so that your risk in 10 pips and your reward is at least equal or more than the risk. That's sensible, good trading, if that makes, if that sort of, because we'll talk about that, how that relates to your account in a moment. So you're right, Dan, if it's more than 100, then you've got 15 pips as a 15%. It just gives you a... Now, Heather, you could, and advice is, you could actually go for only 5 or 6 pips. Which again, you know, if you're sort of hesitant in your 5-minute candle and where you get in, it all depends. So let me just do this though. You can see the chart here. Let me go up now. Oh, sorry, over to the side here. I'm going to click on what's called pitchforks, but I'm going to come down here to fib retracement. Okay, I'm going to click on that and I'm going to go from C to D. If it's the right way, we'll see how we go.
Yeah. No, you need to go to the top.
What did I do? Sorry. Get rid of that. Yep. Need to go what?
To the top of that candle. Just the scan has stopped.
Yeah, I know. I've just clicked it wrong, Dan. Just a second, mate. Let me get onto the... I'll go up to the top. Oh, what the hell?
Well, you can move that as well.
Yeah, I didn't want to. There you go. Top of that. Now, I don't know where it is at the bottom. Oh, you know, it's right. It's correct on the bottom. It's just gone past it, I think. Yeah. Okay. Let's now look at this.
Double click on it.
I double click on it. On this?
Yeah.
Oh, yeah.
Oh, no. On the Fibonacci tool.
Yeah, okay. We'll get rid of 786. We want to do one.
Get rid of all of them.
I want to put... Oh, you want to get rid of all. Okay. All right, then.
Just change 1 to 15%. And turn it on.
Uh-oh. Uh-oh. It's gone
No,
now.
go up to the top. Cog.
Yeah, sorry. I've got to... And, yes, I've got to turn it on. There we go. And I'll pull it across, so... or can I? Maybe.
No.
That not it?
No.
It isn't either. Let's go back. Oh, rats. Oh, yeah, that's all right. I can do it there. There you go.
So see, here's the thing. Although price has gone through, way through, if you wait for that 15-minute candle to close before you're entering, you've gone past your 15%.
Does that make sense, Heather? No.
No, I missed all that. So I missed.
Okay.
Yeah.
And I haven't shown the other bit, which I actually let me go back and do this. Let me put in. What do we need to put in, Dan?
618.
And the 38.2. We'll put those in as well. But I think I'll
put the 1 and 0 in as well.
Yeah, we'll put that in too. All right, just so I can play with it. Let me just go. Actually, I'll need to put back in the 100. So let's just play with this in a way. So what I'm going to do now is I'm just going to bring this back down to here, point D. And I want to show you something that's just happening. And I've got the colors on there, Heather, but I want to show you. That's our entry point. See TP1?
Yep.
And it's really hard to see, but in actual fact, TP1 is exactly on 38.2 Fibonacci. TP2 is exactly on 61.8. And TP3 is exactly on 100%.
Okay. I'm not familiar with Fibonacci, but I'll get it.
It's okay. And the reason why I've put it on from C to D is the scan and the web scanner will place TP1, 2, and 3 at exactly those Fibonacci readings. TP1 will always be 38.2 percentage. So think of it. See how that candle has touched C point there, and then the candles have all gone up here and bang, and it's gone up to D.
Yeah.
That C to D is what's called 100% Fibonacci.
Okay.
I talk of it as that.
Yeah.
Right. So your percentage, if that currency retraces or comes back down to C, it's then TP3, and it's 100% of what it went up. It's gone back down again.
Okay.
It's not very common that it retraces 100%.
So the reason at the moment why we're discussing Fibonacci is to just show you how they come up with the TP1, 2, and 3.
One of the things, and also too, it also reinforces the Fibonacci of the retracement.
Yeah. So
if it's going to retrace, can you see? I don't know. Hang on. I'm just going to make this really, really precise if I can. Just in there. I want you to look at that blue candle. And I want you to look at that Fibonacci line and that TP1.
Yeah, it just breaches it.
Well, we're talking a bee's dick here.
Yes.
It's basically touching it, and it's like that is as precise. I obviously haven't got this exactly on the right. That Fibonacci should be sitting on that TP1 line in relation to what they've done. But what I'm saying is that closed off exactly on that line.
Yeah. But what you're talking about now isn't to do with what I would have, or not myself, but anyone watching this. We don't have to do this as part of the Quickfire, do we?
No.
That was just a quick explanation to let people know how they get TP1, TP2, TP3.
Yeah.
Sorry.
And about
in case people are going, I don't know what they're talking about, because I did it.
And about retracement though too, Heather. It's also about retracement. Like how much, if a currency goes this way, how much it'll go in the opposite direction. If it goes down, how much it will go up. And do you think that the percentage of retracement is more with higher numbers or with lower numbers? Lower percentages.
Lower percentages.
Correct. So the probability of it going in that direction is more likely in a lower percentage situation than a higher of its retracement, if you think of it in that term. Now, what Dan has done though, and this is what you can do, is remember he got me to click on it, and we put in 0.15 and made it visible, and that put that red line in there. So what Dan said before is, put this up the top of there. But I'm just saying, if you got into a trade at this point on that first red candle, 15% would be down here. So that's like, maybe that's like 10 minutes of that candle, 15 minutes of that candle, and the start of that candle, you would actually have your 10 pips and you would be out of the trade.
Yeah.
Shift click up.
Sorry, say that again.
Hold shift, click on the 15% line.
Okay.
And then go up to 0.
Uh-oh.
Now let go of the click. Right, hold shift, left click and release.
Yeah, that's up
13.
That's 13 pips.
Yeah. So there's your 10 pips.
Plus 3 pips for like when you got in and you spread and all the rest of it.
Yeah. So there's your 10 pips straight up.
How easy is that?
So I would use this Fibonacci.
What I would say is get the Fibbo up, take off all the lines except for 1 and 0.
Yeah.
And add a 15% line.
Okay.
And that 15% line is your take profit.
Okay.
So the way to do it is I'll show you. We'll just we'll click off here to get rid of that. Just double click on the Fibbo. It'll bring this up. You tick on the 0. I can untick the 6.18, the 382, leave the 1, the 0 and put 0.15, and bang, you've got it. So the 0's down here. Sorry, your 0, and this is the 100 there, and your 15's line is in there. Done.
All right. So what you did was you went over to the Fibonacci.
Well, actually, I went over to here, which probably said pitch. Oh, wait a minute, where? Not there. Where is it? Where
the one that's got the Fibbo
there.
picture.
It probably said pitchforks. You click on that and the little arrow and come down here to Fib retracement.
Yep. So you click on that, and then you click on the C and then drag it up, do you?
To the D, yeah.
D. Or like what Daniel said, to the
wick.
To the wick of the blue one?
Yeah.
To the wick, all the way up to the wick, right?
Yeah. Okay.
Okay.
Does that explain it well?
Yeah, that's clarified things. I just thought it was a little bit muddled in my mind there for a minute, and I thought people watching, we kind of jumped from that to that, and I missed why we were doing it. That's all.
No, that's okay.
So
this is actually would have been, if we had have seen this right when it came out, this would have been a pretty good trade.
Yeah, good trade. Awesome.
And you can see that that's even gone further down to TP1. But at this point, it's already hit your profit there of 10. It then dances with a bit of a flag and drops down further. So in your head, you might go, oh, I could have got more pips. But at this point here, after you close out at 10 pips and you don't need any more trade for the day, you're in the sun lounge over here drinking pina coladas.
Yeah, you don't worry about woulda, coulda, shoulda, because that's not, you've got your 10 pips. So be grateful that you got your 10 pips and just get out of it.
Yeah.
As long as you can set in, it's like, people who go do stupid things in the pokies and just keep hitting that button and then, I'll win more, I'll get more, and then they come out with nothing.
Yeah.
Because you're greed. I know I've experienced that and didn't realize it was greed, but it was greed. I thought I was doing really well, and I was, until my mindset got screwed up and, went for bigger, better, and ended up, bang, nothing.
Well, and here's then the last step I think would be good, and you could do clarification if you want on anything there, Heather. Let me just stop sharing for a second, and I'm going to share again, and we're going to look at something that you can go to a site called MyFX Book, and this is what's called a position size calculator. And this
I have this app on my phone.
You've got an app, have you?
Yeah, this is on my phone. This is my calculator for all my trade sizes.
Yeah, great. And there's a few around. This one is really good. So, for example, this is NZD CAD. So we might we'll go and look at.
Change your currency.
Oh, yeah, I'll have to do. So, yeah, well, because we're AUD, we'll just do that. And then we're looking at NZD CAD, which would have been that trade, for example. Say, for example, it's $1,000 we've got in the account. The risk, we're only going to do 2% on it. And the stop loss pips, we're going to put 10 in. Are you okay with this, Heather?
Yes, thank you.
And then we're going to calculate. So this would be, so for example, a risk then is $20 on a trade, and all the profit for 10 pips on the trade would be that as well. And this is the lot size that you would put in on the trade.
Okay.
Pretty simple.
That's awesome.
Just for clarity, if you use swipe trades and you get a text message or an alert through them, they will say 0.03 per 1,000.
Yeah.
Whereas that's 0.19.
Yeah. So this is 2% of your account, and yeah, this is where you can, you know, I think we've gone through the steps of Quickfire, how to set it up, how to look at it. You can do it all from, sorry, you can do it all from the web analyzer, or you can get, you know, keen later, and you can actually just transfer the scan across into your into a TradingView free account, and you don't need to pay to start with. Once you do use it a bit, you'll end up wanting to pay because of the features of it. And you and I, Heather, have access to Pepperstone, that trading terminal, which would make this very easy.
Yeah.
So we would open the trading terminal, put in that lot size with that currency pair, with that a take profit and then basically just hit the buy or sell in relation to it. The only tricky thing is remembering whether it's a buy or sell.
Yep.
And that is a pitfall for new traders. It's like, hell, was it a buy or a sell? Which one did I click? Wrong way. You don't want to do that. So yeah, that's basically that Quickfire in a teaching long sort of method. If that's, does that help you out, Heather, now?
Yes, that does. Thank you very much.
So are there points for clarification?
I hope everybody gets that, understands it, who watches this. I think they will, because I think we're pretty clear about everything.
So let's just quickly though, Heather, I just want to quickly go through, just going to double click there and bring some things back. So we now have a sort of one chart. So first things first.
You're not sharing, Brian.
Oh, sorry.
I'm still looking at my Facebook.
Yeah, we're going to go back to, thank you for reminding me. You need to remind me. That's the, I did say to you, Heather, at the start. That's right. So on a trade, when the markets are open, and we have a similar time frame in there, and we've set our chart up with the different indicators, Bollinger Bands and RSI and the MACD the way we want it. What has to happen at a scan, and remember, we're only looking at scans that only have a single entry line to start with, all right? We'll do a bit more training in relation to when it's a shark, or there are actually a couple of others that have dual entry lines. But if you see a dual entry, at this point in time, don't play with it. It's in the don't go near list, all right? So what do we want to do when we see a scan come up? What, if it's going to qualify to start for a Quickfire, what's going to be there?
Okay, the first thing you want to look at is, does D touch or go above or below, depending which direction it is, the entry line?
The green line.
The green line, I'm sorry, the green line.
Yep.
And then if that's right, you need to also check, is there between 80 and 100, or start off with 100 pips between C and D?
Yep.
And if that's that you tick that box, that's correct. That's another goer.
Because it's increasing what? What do those two things?
Increasing the probability of the trade going the way that you want it to go, or the way that it's saying it's going to go.
Yeah.
The Bollinger Bands, they if they've gone through the Bollinger Bands, you kind of measure that up with the RSI, I think. Like the RSI, if the RSI is going above 70 or below 30, depending which way, again, the trade's going, that's another confirmation. If it's above 70 or below 30,
yeah.
And the divergence on either the RSI or the MACD, as long as it's a yes, and it's a yes if they are opposite. So if it's going on the chart, if it's going up on either or, the MACD or the RSI, it's got to be going down for it to be ticked as a yes, that is a divergence. They must be opposite each other. If they're the same, it's not a go.
There is a thing called hidden divergence where everyone's flat and they're all right.
Okay, are they any good?
Yeah.
Yeah, just
It is still divergence as long as they're not going the same direction.
So if it's flat, it's okay, as long as they're not
doing flat. If one's flat and one's going up, you're all right.
Okay.
You could start out, Heather, that you could start out with this if you wanted to, and you just look at the number of trades. Remember, where you're demoing this.
Oh yeah, demoing, because I've not done this before. So right at the start, and then they had a lot of. I was actually doing this or started to do this, and then do you remember late last year they were having a lot of troubles with it? That's when I went, and then they brought the web analyzer out. I flipped over to that.
Yeah.
I do like
So at the start, Heather, what I'd like you to do is have all of these things in place. Now, the RSI divergence and the MACD divergence, I would make sure that they're in actual fact, because when you look at the training by MAM or Steve Gregor, they say that this RSI or MACD divergence is actually not required in a single entry line, but is required if you were to have a shark, or a double entry line. I think when you start out, for me, the MACD divergence is probably a thing that needs to be ticked rather than not be ticked to start with, because you're just bringing a higher level of probability to that trade than if it was without it, if that makes sense.
Yeah.
The RSI, for me, in my thing, RSI divergence has a less importance than MACD divergence. Dan will have his view, and both of those having divergence is not the highest priority in any of this. So in actual fact, when you get down the track, maybe not having divergence in either of them, and as Dan said, there could be a hidden divergence in it, is not necessarily overly crucial. Yet if it is there, it's such an extra confirmation, it's really worth it. So your view, Dan?
Yeah, no, I agree.
Okay. All right. So I think that's about it. Now, I only want to clarify one thing, Heather. Bollinger Bands is you're looking for the currency or the actual candle to be outside of the blue area of the Bollinger Bands, either above or below.
Okay. So they do need to be outside of.
Yeah. Yeah. So I wanted to clarify that.
Okay. And I'll just clarify that anyone watching, I'm going to be using a demo account, and it's a good idea to do that. And then that way I can even trial, even though, Brian, you're saying what you're saying about the divergence and that, I can, because I'm on demo, I can play around a bit more with it and then sort of see the difference, if you know what I mean, and see what it is, because I'm on a demo account. But it's better off playing with a demo account than it is on a real account and stuffing up and losing your money because.
Correct. Now, Heather, I do want to say though, and people don't really think about this, there needs to be a quantity of trades for you to be able to make that assessment of whether that component of it is worthwhile following or not, to the letter.
Yeah.
Touching and breaching a D is mandatory. Having the number of pips to start with on the C to D leg, having 80 to 100 is really mandatory. Having it outside the Bollinger, mandatory. Having the RSI above 70, mandatory. The divergent stuff at the start, it really should be mandatory.
Okay.
And then you can sort of work with. So this means, correct, there are far less trades that you can take. It's meant to be that way because it increases the probability through the roof. And again, only great trades We don't want just ordinary or good trades. They're not worth it.
Yep. Okay. Fantastic. Thank you, Brian. Thank you,
That's
Dan.
quite okay.
That's
So
right.
has this been informative?
Very informative. Thank you. And I'm sure the people watching this replay will be really happy with it.
Yeah.
And thanks to the guys that have actually come along and watched.
Yeah, there's a few people there. So yeah, good on you. I think we've still got three. No, we've got four there watching it again. So anyway, I'll if anybody's interested for this, what I'm going to do is probably I'll download this into my computer and set it up into YouTube. So if anybody wanted to sort of refer to it, we'll see. I might even drop this into the Ninja group. We could use it around the place a little bit, Dan, or you could use this yourself as well if you want to, and you as well, Heather, if you wanted to use. So let's look at the next stage. We'd like to really try and see, Heather, what your experience through the week had been. Maybe if we do, we might come back and revisit this.
Yeah. I'll trial it in the new week and see how I go and give you a report back.
Yeah, that'd be great. All right, so let's keep on board with that. So remember, we want the highest percentage of probability for us to have at least 10 pips out of a single trade, and there will be a number of trades per day, but we only need one to get those 10 pips at that 2% percentage. And we might talk about that, Dan, as a probability in the future. We'll talk about that, how that compounding effect of that 2% only would actually grow over a very short period of time into a considerable amount of financial freedom and wealth. So yeah, all right then. There are no guarantees. We are not guaranteeing anything here. Common disclaimers on everything. So thank you very much for your time, everyone. What I'm going to do now is I'm just going to stop the streaming, and thank you everyone for attending.
Thanks, everyone.